Hello traders, you're welcome to this video where we're going to be breaking down the order block forex trading strategy. It's a method used by professional traders to align with institutional order flow. Now, if you have ever wondered how to identify the exact price zones where the market reverses or continues with strength, then you are about to find out. Oh, okay. Now, in case you do not know what order blocks are, an order block is an area on the chart where large financial institutions like banks, hedge funds, and other smart money players have placed significant buy or sell orders. So these orders create strong imbalances in the market, leading to sharp price movements. So basically, when price returns to these zones, it often reacts strongly, giving retail traders a chance to either, or trade with the smart money or do whatever they want to do. But basically, you ought to take advantage of trading in the direction of this smart money. So it gives traders the opportunity to enter alongside the big players. So basically, there are two types of order blocks. We have the bullish order blocks, which form before price moves upward. I'm still going to go into a little bit more detail, okay? But now I'm just trying to do general overview. So when you have a bullish trend, for example, like what we have here, you're going to be finding bullish order blocks because bullish order blocks occur before price moves upwards, and then bearish order blocks form before price moves downwards. Okay, not every zone on the chart is a valid order block. So now we are going to be looking at how you can identify valid order blocks. A valid bullish order block is typically the last bearish candle before a strong move upward that breaks market structure. So if you look closely, this is a bullish trend, right? And we are having higher highs and higher lows, right? Although we kind of had a double top here, right? The double top, a double bottom around the zone. But basically, let's just work with this and this, right? So we are just going to use this as an example. If you look closely, you will see that there was a break of structure here, right? After price formed this high, formed this low, then formed the next high, there was a break of structure around here, which validates this bullish trend, right? So a bullish order block is going to be the very last bearish candle, all right? A bullish order block is going to be the last bearish candle before a strong move upward that breaks this structure. So this is our last bearish candle. This is our last bearish candle, this particular candle here, before we had this move upward that broke this structure. So in this case, we have a bullish order block around here. All right, so it's very easy to recognize. And then a valid bearish order block is going to be the last bullish candle before a strong drop that breaks structure. So after this bullish trend came to an end, as you can see, we had a break of this bullish trend line. So at this point, we had a change of character, right? You can see, because ideally we ought to be having higher highs and higher lows, but here we had a lower low, which changed the bullish character, right? So now we have to look for the last bullish candle before this bearish impulsive move, before this impulsive bearish move, right? So in this case, this is our last bullish candle, right? Our last bullish candle before the bearish move that led to this break of structure. Okay, So or rather in this particular case that led to this change of character. So this is going to be our bearish order block. But if it is in a case whereby the trend is already bearish, let's use this as an example. Okay, so here we had a break of structure here, right? Because we have high, low, lower high, lower low. So we had a break of structure around here, a bearish break of structure. So in this case, this is going to be our bearish order block, which is the last bullish candle before the break of structure. So you can see it's pretty easy, right? It's pretty easy to identify. Okay. Now you just have to look for clean, decisive moves away from the zone, not choppy price action. All right. On higher time frames, these zones are more reliable. Yeah, remember that price action on higher time frames are usually more reliable than the price action on the lower time frame. So take note of that. Many traders use the daily or even the 4-hour charts to mark their order blocks. Then they drop down to the 15-minute or the 5-minute charts for refined entries. Okay. So basically, once you have marked your order block, you wait for price to return to it. A good entry signal is a break of structure confirming the market's entry, or rather the market's intent, right? So before you even enter the trade, you need to watch out for a confirmation, a break of structure combined with a strong rejection wick or a shift in candle body direction. Then for your exits, you can target the next major liquidity area. Let's say, for example, if we had gotten a good entry opportunity, because in this case, you can see this bearish order block, it seemed as if it was respected for a while. Price entered into it and it just moved down for a bit, and then it broke the order block, and this turned into a breaker block. So in this case now, uh, this zone wouldn't have yielded profit. Okay, but in a case where we have an order block mitigated and price goes in the direction of our trade, or rather in our expected direction, your exit target, your take profit target can be around the next liquidity area. Perhaps if you were entering a sell trade, you can even target maybe bullish order blocks below, yeah, or perhaps support zones below. All right, just make sure that you have a good risk to reward ratios. Okay, you can use previous highs or lows or even fair value gaps for your exits. Always have a clear stop loss just beyond the order block to protect against false breakouts. Now, trading with order blocks does not mean taking unnecessary risks. You have to keep your position sizes reasonable and never risk more than a small percentage of your capital per trade. High probability setups can still fail, so consistency in risk control is key. All right, order blocks work best when combined with market structure analysis. So you have to identify whether the market is trending or ranging and align your order block entries with that overall bias. Okay, this increases your accuracy and reduces the number of losing trades. Now you know how to identify, trade, and manage risk with the order block Forex trading strategy. Apply these concepts to your charts and practice until they become second nature. If you enjoyed this breakdown, click the like button, subscribe, and turn on notifications so you never miss another advanced Forex trading lesson. Thank you for watching. I look forward to seeing you in the next video. Happy trading.